Hey everyone, welcome back to yet another episode of Reinventing Finance. As usual, I'm not all by myself babbling about finance and insurtech. I have my lovely co-host with me today, as usual. Tom, how are you this fine morning?
Thank you very much, Nick. Very much looking forward to our conversation with Tim.
And you've already spoiled or spilled the beans. Tim, happy to have you on board. How are you?
Good, thank you, Nick. Good, thank you, and thanks for having me on.
Of course. Why don't we just kind of start light, and why don't you briefly introduce yourself, Tim? Or who are you and what the heck are you doing?
So I'm Tim Quayle. I'm the CEO of a business called OneAdvent. We're a London-based specialist MGA services platform. And I guess for those of you who don't know what an MGA services platform are, we help MGA businesses launch and grow and provide an infrastructure and regulatory environment to enable that.
And why is that? So can you kind of walk us through and maybe starting what needs to happen outside of creating a product, underwriting, getting a customer to launch an MGA business? Say you are currently working for a big underwriting firm or something. Whatever case scenario is helpful for you to kind of walk us through the steps and where you support on kind of getting that started.
Yeah, of course. Pretty broad question. So most of our clients tend to kind of fit into three buckets, I think. One bucket is the innovators. So those are the guys who are trying to do something different, often with a bit of insurance expertise in their team, but very, very often people from outside the industry who are looking in and going, insurance is broken, we can do this better, we've got a really good idea, we want to try it out. And so those are
cyber, is that kind of coming from cybersecurity, or do you have an example for us? As innovation has been somewhat tarnished as a word, and I want to kind of put an example to it.
Yes, I'd say cyber's been around a while now. We're seeing the next phase of cyber coming through. So I wouldn't. Yes, the next phase is an upgrade, and those guys are the next breed of cyber MGAs are doing stuff differently to what we saw 3-4 years ago. But I wouldn't necessarily put that in the innovator space. I was talking to an interesting business recently who's looking to do something in the crypto space and looking to try and come up with insurance products to ensure some of the risk in the crypto ecosphere. And so I'd say that from a product perspective, that's innovation. And then you've got those who are looking to innovate on the tech side, be that different ways to distribute or different ways to price. And so those are the guys who are looking to do something different. The next bucket, I think, is probably I'd call spin out. So these are probably established, proven teams who know what they're doing, know their product, know their niche or their angle. And these are often quite well-funded opportunities backed by private equity, because these are often very credible individuals who've gone and done it somewhere else in a big company and want the flexibility to go and do it in a smaller environment where they have more control over their future. And then probably the third bucket's a terrible word. The third category of business that we work with are probably people who are looking to expand in the UK. So businesses that have had some success in other territories, they have some traction, they've proven their model, and the next step for them is to move into the UK. And so what's common across all of those and why they come and speak to us, it starts with regulation. Right, and as you know well, Nick, the UK is heavily regulated in the intermediary space, much more than somewhere like Germany, and so regulation is the starting point. And I guess each one of those has slightly different requirements. So your innovators, I mean, they're almost looking for the insurance 101, right? They're looking for someone who can literally guide them through every element of how to test their product, how to prove that there's product market fit, how to prove that they have actually got a good idea, and so they're looking for someone to hold their hand the whole way. Your spin out, it's all about getting to revenue quickly. right? So often these teams have huge cost bases attached to them because they've all been in a big corporate environment, earning big salaries. It's big stuff, and so getting to revenue quickly is really important. The expansion, the people looking to come into the UK, it's probably more about execution risk. It's probably, look, we've done it somewhere else. We need a trusted partner in the UK who understands what they're doing. And so, I guess the starting point for all of our conversations is around regulation, and we've got this unique structure in the UK called the appointed representative regime. And what this means is that firms like ours, who are directly authorized intermediaries, who have appropriate frameworks, oversight, experience, are able to make other businesses appointed representatives of ours, which means they can trade under our regulatory umbrella within the parameters that we set for them. So we don't just say go and crack on, get on with it, do whatever you want. We say, okay, what are you trying to do? These are the parameters that we're comfortable with you doing, and this is the information that we're going to need from you, and this is the oversight we're going to need. And the regulator allows us to do that, and as their principal firm, holds us responsible for them complying with regulation. And so it's this amazing structure that allows us as a business to support these early stage companies without them having to go through a direct authorization process and build out their compliance function, build out their risk function. And so they can leverage off everything we have and our experience and get going with their businesses. And at an appropriate time, they can start to build out those functions within their business, and ultimately with a view to them having a direct relationship with the regulator and I guess progressing out from our regulatory umbrella.
A couple of follow-on questions. One, you've mentioned UK market entry. Now, how has Brexit changed? Because previously UK also meant European Union. Are you now only helping companies enter the UK? How has Brexit impacted that value proposition for you guys?
So I guess with any change like Brexit, it breeds opportunity. And for those who are able to get their head around the change and move quickly, there is opportunity. And so, yeah, I'd say as a platform, we are able to access Europe through working with partners like Casco Nick, and that allows us to support UK-based MGAs and help them to get access to the EU. And then on the reverse side, we're seeing lots of opportunity now from European MGAs who have got some traction in the continent. They've proven their product, and they see the UK as a natural next market for them. But whereas historically they'd be able to passport in from their domiciled country, now they can't. And so they need to work with someone like ourselves who can help them step through that process, help them get launched, help them get established, ultimately with a view to them at some point being a directly authorized intermediary in the UK.
Understood. And that's actually true. I mean, it's as you've said, any kind of change breeds opportunity as well. I would say the second thing, kind of a little bit around services, just so I can kind of get my head around, and appreciative that everything depends on what your customer wants, and also subject to change over time. But what would be the maximum suite of services that you could potentially provide, or period, right? We've said regulation, licensing, compliance, risk. What else is there that is required and to run an MGA business, and that you can support, just so I can get my head around?
So we would say that we have a full stack service proposition, and I guess what we mean by that is we can provide all of the services that we believe an MGA business needs to get launched in the UK and expand into Europe. Now, in reality, some of those are core to our business and are provided within our team, and some of those are trusted partners that we've worked with for years that we are able to bring in. And so I guess a typical engagement for us, it starts talking about regulation. I say as a platform, we're quite hands-on with the businesses that we support. We like to get quite involved in their business and help to make them a success. So starts with regulation, and then it very much looking at their business. Okay, so what capabilities do you have? What are the gaps? How can we fill those gaps? And can we fill those gaps cost effectively with our shared services model. And so generally each engagement is slightly different. And the one thing I'd say is each engagement is slightly different at the start. Every engagement changes very quickly, and because these early stage businesses, right? And I think the one thing we've learned over the last couple of years is we have to have a flexible services proposition, and that is something that I think does make us stand out against some of the other platforms. I think we understand early stage businesses really well. We understand that we've got this great plan. We know exactly what we're going to do for the next 5 years, and 1 month into that plan, it's all gone out the window and we're going off in a slightly different direction. And so what we try and do is support those businesses and be flexible and try and adapt our support depending on where they are in that life cycle.
I'll ask you about some differentiation or positioning across the competitive space. However, I've had one further question when you've said we'll help you launch, and then you can start insourcing these things. So just from your business model, how sticky is it at some point, or do you require is it kind of always temporary? Just out of interest of how you view that based on you've been doing this for a while, and just out of curiosity.
It's a very interesting question, because I'd say that universally across every opportunity that we engage with, when we sit down in that room talking about what they want, everyone has a clear idea that within 18 months they want to be directly authorized, they want to have progressed past the OneAdvent platform, and they want to be flying to the moon. And ultimately we have to enable that for a lot of people when they sit down in those initial meetings. That is a hard-coded requirement. So as a platform, we need to be able to support that. In reality, I'd say over the 6 years I've been involved in OneAdvent, we have only seen 2 businesses progress away from the platform in an entirety. Now, some businesses will go and become directly authorized, and they will engage with the regulator, and we will support them in that, but they will still see some benefit from the shared services that we're able to provide as a platform. And so even businesses that we've been able to take up during that time frame to a point where they've actually been able to exit those MGA businesses, we still have commercial relationships with those companies. And so yes, on paper it looks like a very kind of transitionary kind of we're here for a part of the journey, and ultimately we could be constantly churning clients. The reality is, if we do a good job and we service those clients well, history tells me that they will stick with us, and that service provision may change, but we will maintain a meaningful relationship with them.
And I mean, from my view, I would have thought that there is a clear, let's say, a ticking time on the regulatory aspect, per se, but as you've mentioned, shared services can make sense to have certain shared services and not kind of insource everything. So that seems like a perpetual provision. Plus, as you've said, there's a network of requirements at some point, as it just doesn't make sense for every business to insource, everything. So for me, that's how I've kind of mentally split it out. And if I've, from our previous discussions, have understood you correctly, you sometimes also support with investment or working capital. Probably not everyone, but and that is another way to kind of establish a long-term commercial relationship.
I absolutely agree, Nick. And I think fundamentally, if you're willing to be flexible and you provide good value services, there's no reason why you can't have meaningful relationships with these clients. And I think you're right that certainly for some of our more ambitious clients, that regulatory piece has probably a relatively short to midterm kind of transition period, because some of these clients who achieve incredible scale in other territories are looking to grow to a size where they need a direct relationship with the regulator, and I don't think it makes sense for anyone for them to be that one step removed under our umbrella. But the flip side to that is there are smaller clients where actually probably that decision to become directly authorized probably only comes into play when it's driven by a potential exit event or a fundraise or some kind of external trigger that suddenly makes it important, because actually in the reality is they're leveraging off a load of stuff that we already have, that we know what we're doing, which is allowing them to get out there and grow their business, grow their product, grow their distribution. And so why wouldn't you?
No, and absolutely. And I think it's the question, you then need to insource your own approved person, you create whoever that is there some certain dependency on that? People will want to get paid for that additional risk. You still need to answer compliance questions, monitor, etc. And so I can see how that can then kind of evolve. But just kind of wanted to double check that I've understood the model correctly. I'd say if it would be interesting to understand a little bit around how competitive the space is, and how you consider how you position yourselves. As we both know, MGAs come in all forms, and there's MGA is not a very homogeneous group. But would you feel comfortable to kind of say this is how you compare and contrast with other services?
Yeah, of course. There isn't there isn't a particularly exciting answer to this question. It is something that we get asked quite a lot. There are probably 2 or 3 MGA platforms that do have a very similar service offering to us in London.
So that's not a lot, to be honest, right? So that's not 20 or 30. I mean, it's not, Tom, as you know, enabling insurers, InsurTech as a service, that seems more crowded, what we're doing on the tech side. So 2 to 3 is not an awfully large number, I would say.
No, and there is a wider pool of people that kind of dip in and out and pick off certain kind of subsections of the MGA. But I think those who position themselves as kind of specialist, London-based MGA platforms, I'd say there are probably 2 or 3 with a very similar product offering to us. And I'd love to have this amazing USP that I could say, look, this is what makes us different to them. This is why everyone comes and talks to us. I think in reality, it's probably down to personality. And this is no kind of negative reflection on the other platforms, but I think each of us has a slightly different personality. And I think that personality attracts different type of people. And I think you know quite quickly which are the businesses that you want to work with, that you're going to work well with. And I think our personality is driven by a couple of things. We've deliberately tried to recruit quite a few people from outside of insurance. So we have a real blend within our team of some real kind of hardcore 40 years in the industry and a team who have experience from other industries and bring that to the table. And so I think that gives us a slightly different flavor. And I think we understand early stage businesses really well. A lot of the team have a sort of SME kind of entrepreneurial background, and so I think we understand early stage businesses. We understand the need to be flexible, and I think that really comes across with the people that we're talking to. And so yeah, I think I'd love to pinpoint it down to here's something we do, but I think it is personality, and that's not just like I think some of the other platforms are really good as well, and they have a really good service offering, and they have a slightly different personality, and that's right for some people. And so yeah, the good thing about the MGA space is that there is so much going on, and there is so much opportunity that actually, yes, everyone who comes and talks to me, I know, is talking to several of the other platforms, but there's enough opportunity that we're not all scrabbling around over the one good plan floating around the market. There are lots of good plans floating around the market, and it's a case of getting good fit between these MGA businesses and the platforms.
So I think that's it's a perfect stepping stone to kind of segue a little bit into the market. I would assume that you have a unique perspective on what business plans float around in the market, and having seen this over a bit of a kind of time horizon, also, what seems to be working and not. Have you, and oversimplifying, or, it doesn't have to be statistically relevant, but with that perspective, where do you kind of see the market going? What works? What doesn't seem to work? What are you looking for to hash out what's exciting, what's not exciting? Because we've all been proven wrong, right? I mean, that's the nature of being in the early stage. I mean, we don't go into any engagement that we think is not going to work. We already go into those that we think are going to work, but then not everyone, at least that's my pattern recognition, it doesn't all work out. So any kind of things you might share about where the market is going, what's exciting, or what is also a red flag?
Yeah, so I think looking at MGA, so if I start with sort of more traditional London market MGAs, the one thing I'd say over the last couple of years is I think the bar has been raised in terms of launching MGA businesses. I think what we're seeing now is I think we're seeing better plans, better funded opportunities, probably less of the here's an underwriter who's looking to spin out of big insurance company because he loves the MGA dream. You have to be bringing a little bit more than that, I think, now, in terms of the opportunity. So I think the bar has raised, and I think the quality of opportunities that we're seeing on the traditional MGAs has improved. And I think equally probably the quality on the innovative stuff, the kind of insurtech side, I think the quality there has improved, and I think that's probably been driven by the funding environment. There is less funding out there for. I mean, there's a huge amount of funding. Generally speaking, there's a huge amount of funding available to the intermediary space, right? We haven't seen any change there. But what we have seen, whereas when I first joined OneAdvent, you come up with a cool insurtech business plan, and I mean, you could raise £1 million to launch it in 2 weeks with a handful of conversations, right? I mean, that was the reality of the funding environment there. I think now, if you're going to get serious funding, you have to have a bit more than that. You have to have a well thought through plan. You have to have a credible team who've executed before. And so I think generally speaking, the quality of what we see has improved across the board. I think we're seeing, go back 3 or 4 years, lots of plans just circulating the market, trying to stick somewhere. I think there's a lot less of that now. I think these are quality plans who are deliberately going out and identifying the partners that they want to work with.
So let's just and I understand it's a broad question, but let's just kind of say how important you've mentioned is, how important is, for example, that someone has a track record in not just maybe growing in existing underwriting book. How important is that versus, let's say, they have a cool technology and the technology is going to solve something because they have some, I don't know, that's how a lot of VC-backed MGAs seem to have kind of launched, just kind of getting a sense of what are the ingredients that are required to kind of say, okay, yep, this could be a winner.
So for me, track record is really important. But I think track record has a different, depending on kind of what type of business it is, that could mean different things, right? I think looking at your kind of spin outs, you're looking for track record of the team, right? You're looking for a team that have potentially set up in multiple places before and created large books of profitable underwriting business. So that's a big one about track record of the individuals. I think in the kind of
I think you've just as a side note said something very important. Have set up in different places and grown different businesses rather than managing an existing book profitably, because it's very different to go from 0 to 1 than 1 to 10. That's just a very different beast, and we're currently looking at spin-outs and incubation where you need to start from 0 at some point.
Absolutely, and I think if you look at the spin-outs that have got big private equity checks behind them, my view is that they tend to be those that have not. This isn't them going from 0 to 1. This is they've done 0 to 1, and this is because that is massive, right? And there's huge execution risk there. Just because you've created a really profitable book and managed it for 15 years with big insurers doesn't mean that you can go and do that in a different environment. And so I think I agree with you completely. I think that's a really, in terms of track record, that's a really important part of it. I think in the insurtech space, because people are innovating, that doesn't necessarily have to be an insurance track record, but I think having a track record of starting and building businesses and finding that kind of product market fit and going through those early iterative phases, I think is really important. And one thing we can do as a platform is those teams often don't have all the insurance experience, but that is where we can come in. And so that is part of where we can wrap around these teams. And the innovative stuff is the exciting stuff, right? That's the stuff that gets us kind of bouncing out of bed in the morning, but it's also a lot of hard work. I mean, a lot of the businesses that we work with, it's almost insurance 101 at times. We are having to start with the real basics in terms of how do you manage a regulated sale? How do you promote a regulated sale? How do you work with distribution partners who aren't regulated? All this kind of stuff that for them is barriers to getting this business off the ground. We have to overlay and support them in.
I have a question about the maturity of the UK market. I mean, the UK market is very advanced, very mature. I would say on the continent, we're a little bit behind. What would be the lessons learned for especially, let's say, entrepreneurs on the continent? Because it's like looking a little bit into the future if you watch, for instance, the UK development.
Yeah. So it's probably easiest to answer that from a bit of a kind of insurtech innovation context. I think if you look at the businesses that over the last 3 or 4 years have had these big launches, lots of press, lots of noise, but ultimately have kind of petered away. And I think probably they're looking to try and change too much. So I think there's been a bit of kind of the insurance industry is broken. We're going to come in and revolutionize it. I think those businesses have found it really hard to get traction. I think those who have looked at the way the insurance industry works, and let's be honest, this is an industry that continues to make money, has proven to be recession-proof. Like this is, yes, there are elements of it that are inefficient and don't work very well, but fundamentally there is a good business model there. And I think those businesses that have come in and taken small parts of that and gone, this part we can do that bit better, and we're going to focus on that bit, and we're going to take it and we're going to make it 10% better, 20% better, 30%. I think those are the businesses that have got some traction and have gone on to have some success. And I think probably the other side to that answer is data. I think there was a lot of focus probably 3 or 4 years ago on different distribution models and engaging with people in different ways. I'm seeing less of that now. I think everyone's yes, we do need to engage with different audiences in different ways, but I think there's probably an acknowledgement that we're not suddenly all going to be buying insurance over TikTok. I think that's I think we've worked that out now. Nick buys insurance over TikTok, but he's the only person I know. But
lonely.
I think
it's lonely.
We have
you're the only person I know in a lot of categories, so don't. But yeah, I think data is. I was at a insurtech event last night, and everyone's talking about data, right? And everyone's talking about being able to capture data and then more importantly trying to do meaningful stuff with that data and actually feeding into the underwriting process. And so that seems to be, but I don't know whether we're in InsurTech 2.0 or InsurTech 3.0. I sort of lose track with where but I think the focus now seems to be on the data element and picking off smaller parts of a very big industry and improving small small bits of it and iterating around the edges, rather than coming in with this, I'm gonna change the world. It's all gonna be different. There are lots of Nicks out there who want to buy on TikTok. We're gonna engage with all of them.
I would kind of paraphrase that, and Tom, please, challenge that. But I would say, having gone through all of these waves, whatever, I'd say there's kind of two hypotheses that were floating around in 2015 and been well funded that I would say, at least to date, they've been falsified. One is that you can generate trust with a slick branding and self-service engagement, right? That's where distribution is. It's very hard to build trust, and which is why all of these models around, we don't need the intermediary and old insurance brands are bad. We just do something better and put some cool marketing, and that is when people will trust us. It has been falsified, and has then also been supported by some of the kind of more insurance carriers actually who went into the intermediary space, pulling out of getting underwriting wrong and then just pulling out, and that just erodes more trust. And I would say the second thing is that technology is such a big lever in insurance. If you're looking at, I think people just thought we have all of this gross written premium, but if you're really looking and taking out what's being paid for losses, which in technology has not really impacted that much, where we pay for distribution, not, just because you're an API, your distribution partner wants the same thing. So the sliver of operating expenses that you can now sensibly, with a lot of investment, crank up and better, it's just not that big. We're talking a few percentage points. And I'd say that is why a lot of insurtechs or entries kind of work with those people who have trust and look in models where they can, as you've said, maybe not reinvent the entire technical infrastructure, but where you can sensibly inject things like, better data underwriting pricing points that, you can provide to someone. But that in and of itself is probably not going to mean that you're going to, I don't know, just sort of like outcompete Howden on all of their engagements, right? It's just not going to be enough. So you better partner with them. That's how I would kind of paraphrase and maybe twisted your statement. But Tim, would you support that?
Yeah, I agree, Nick. And I think, yeah, whether the UK market is significantly more mature than Europe in terms of that innovation, I don't know, but I definitely feel from all the stuff that I'm engaged with that there are a lot of lessons learned now, and we have gone through these cycles, and I think there is a much clearer view now on where disruption is effective in the insurance world and where people should be focusing.
Would you say that if you had to do some form of prediction, because the delegated authority model, right, is not as strongly supported across the continent as it is in the London market. Do you, from your discussions, do you think that's going to change? Is there something to learn from the London market, or is it ultimately, is it how smart would it be to kind of say what's working in the UK, and why don't I do a similar version of that in, take a large continental European? How is that a right way to try to glean something from the London market, or is it just too different, or the question is just too broad, and let's move to a different topic?
Yeah, I don't know. I mean, I guess I'm a huge advocate of the delegated authority model, right? I mean, I guess
why? Out of interest, why? If I had to convince someone at AXA and Allianz who say, why, Tim? I'm having all the data. I can pay all of these really smart people. We have all the historic data. Why on earth should I give the pen away?
Insurance companies move so slowly, Nick. And
fair enough. Even in Munich, I think they might agree that it's not all race cars.
I don't think they disagree with that. And I think where you have well-established lines of generic business, then it's very difficult to justify having an MGA, right? But where you have specialist lines of business, where you have emerging markets, where you have new products and technologies, that's where an MGA can respond so much faster than a big insurance company. And so, yeah, I don't get me wrong, I don't think MGAs are right for everything, but I think there are certain areas where MGAs are brilliant, and they allow the insurance industry to react a lot quicker and to be specialists and to develop niches and new products and respond to emerging markets, and that for me is all about this delegated authority model. It's about giving away the pen to people who are at the kind of forward edge of what's going on, and having confidence in them, and yes, okay, putting a framework around that because ultimately you've got to protect your balance sheet, but allowing these people to innovate and do stuff a little bit differently, and so I'm a huge advocate of the model, and yeah, I can see its advantage. I don't see any reason why that model wouldn't work well all over the world.
And I think you've mentioned something. So and I think, kind of speed, and sometimes it is just the way to get that specialist underwriting expertise, right? It might be a way to get a taste of that line of business and that distribution. But I think you've mentioned something well as well, because what I've heard with some insurers, it's like anything, if you're new to something, you oversimplify. And so insurers kind of go, oh, wouldn't it be great if I just gave capacity to MGAs? That's like an easy win. I don't need to do anything. And they'll do everything. That's very unlikely to work out for you in the long term, because if you're not adding any form of value, then the worst thing that's going to happen is that the MGA is going to kind of squeeze you out down to the cost of capital, because if they're writing a incredibly growing and profitable book, then they can just switch capacity provider in the back, or the other one, they'll just run up a huge loss really quickly and you didn't see it coming. And so I think that if you want to grow in new types of potentially also distribution, but more like product lines, figuring out a strategy of how to work with several MGAs, of which some of your underwriting teams, you might even treat them similar to an MGA, in the sense that you don't give them the same red tape, the same systems. You enable them to kind of, grow their book of business differently than the more established lines. And so I feel that is something that any insurance company that wants to grow in specialty lines, they should have a view about creating either internal MGA-like structures to facilitate that if they see demand in something, or work with external MGAs. Because otherwise, but it needs to be a strategy a little bit. I think you cannot just opportunistically get this right.
I agree. I was talking about this on stage last night with Carbon Underwriting, who've just progressed out from being a syndicate in a box to a full Lloyd's license. And we were talking about how important it is that the approach from the carrier aligns to the approach from the MGA, because the MGA can be doing all this cool stuff over here, grabbing all this extra data, augmented underwriting, whatever. But if that approach doesn't align to the carrier, that's not a long-term relationship, right? So I absolutely agree that it has to be a strategy from the carrier to develop the teams and structures to support delegated authority business and to embrace the kind of innovation that MGAs can bring to the market.
And I would argue that when you're kind of starting out, it might make sense to reach out to some of the contacts that have this experience in the London market, or try to build some, because this is nothing that you don't need to build it from scratch. Just because it's new in Munich, Cologne, Milan, or Paris, it's not new under the face of the earth. And London is probably the place where all of this has been tried and tested, and where you can, get some best practices, which you then need to localize. But yeah, I agree. Tom.
I would like to ask an additional question about, let's say, the future or the whole developments. If you would, let's say, take as a starting point that data is the most important thing, which you, let's say, mentioned before, and we think, let's say, for instance, that the big insurance companies are a little bit slow. What's your opinion about, let's say, future competitors like, let's say, Google and Apple moving into this space? Because you already see in the, let's say, Google Pay and Apple Pay banking environment, there it takes place. And then the question is, are they much more, let's say, keen on the interpretation of the data? Are they much closer to their clients, etc.? So I would be interesting to have your view on that.
I think the insurance industry as a whole needs to be very conscious about where businesses like that could carve out a real advantage. Someone summed up the event I was at yesterday that as insurance intermediaries, all we do is we move data and we move money. And I think, I mean, it's slightly oversimplified, but I don't necessarily disagree with that. And I think if you already are one of the biggest data providers and data collectors on the planet, that gives you a huge advantage in the insurance world. And so I think when these big businesses turn their attention to insurance, and they will, and they are already beginning to, I think they have a huge advantage, especially in the personal loan space. And so I think, yeah, we can expect a serious play from those guys over the next few years.
And I think it will also have to do with, how the insurance business compares and contrasts on either the public or private investor markets as something attractive or not. If you've just been so, positively spoiled of, how tech and growth and everything, future moon, no profitability has been, you've been rewarded by private and public investors, that might also now change. And all of a sudden, looking at a insurance business that is stable, recurring, profitable, who knows, maybe for the next few years, cash flow underwriting is something that'll come back with high interest rates. That was not so certain business models also have macroeconomic benefits to it that might pop them up onto someone's radar when comparing and contrasting with other initiatives.
Yeah, and regulation is a big factor in that, right?
Absolutely.
So that's a big, especially, so I mean, UK is heavily regulated. We've seen consumer duty come out this year. All really good principles around looking after our customers and creating good outcomes for them. But there is a huge amount of overhead that goes with that. And yeah, that would be a big shift for a Google or an Amazon and so yeah, there are some serious considerations around there, but I do think the data they have available to them does. And then yeah, but who knows? Maybe they just focus on being a data provider into the industry, and actually insurance isn't their thing, but they have all this data that an insurance business could look to utilize and leverage.
I would argue data alone is not enough to successfully run an insurance business. You're better off as an enabler. If you combine data and distribution access, that equation becomes very different. Yeah. So I think if you combine those two, then it's very interesting. And I would almost argue distribution even trumps differential data. Just because the distribution margin itself is quite enough to play around with. But yeah, so that would be my without going deeper, my kind of 2-cent evaluation. Tom, thank you so much. It was really time flew as usual, and I am looking forward to seeing you guys on the circuit.
Good stuff.
Thank you very much.
Thanks, Nick. Thanks, Tom.
Thank you very much. Bye.
Thank you.